Overall, our balance sheet and liquidity profile remains strong with INR 5.5 billion of gross borrowings as against consolidated cash and liquid investments of over INR 3.4 billion as on 31st December 2021, despite incurring a capex cash outflow of over INR 0.8 billion during the quarter gone. With COVID-19 related business contributing just over 1.5%, our India business, adjusted for the vaccine revenues, grew by over 3.5% on a quarter-on-quarter basis, despite the seasonality impact. With the recovery in high-end cardiac elective work, 34.9% of India business, as well as international patient mix, 5.7% of India business, led by our flagship hospitals, we are pleased to deliver record profitability for our Indian operations during the quarter gone by, registering an EBITDA margin of 14% for the period. Sequentially, over the previous quarter 2 FY22, our Indian operations registered an absolute increase in EBITDA of around INR 155 million in the quarter gone by, adjusted for the higher vaccine contribution in quarter 2 and one-time impact of incremental other income of INR 50 million in quarter 2 towards the write back of deposits pertaining to a Whitefield unit. With the improving sentiments facilitating people's mobility across regions for most part of the last quarter, profitability of our flagship hospitals recovered significantly with these set of 3 centers of excellence registering an EBITDA margin adjusted for vaccine business of 27.8% in quarter 3 FY22 as against 22.2% in the previous quarter. Separately, we remain encouraged by the performance of our other non-flagship hospitals, including the 3 newer hospitals, as they continue to progress along the respective growth trajectories as witnessed over the previous few quarters, despite the pandemic-induced disruptions therein. They have anchored recovery and revival of the business during the uncertain times. Moving on to our overseas operations, our unit at Cayman Islands, continuing its sustained performance, grew by over 30% year-on-year basis, reporting operating revenues of USD 24.9 million in quarter 3 FY22, resulting in an EBITDA of USD 10.2 million. This for the nine months period ending 31st December 2021, the unit delivered a healthy EBITDA of US dollars to 29.3 million, with PAT of US dollars 24.5 million. Separately, we did the groundbreaking ceremony for our previously announced expansion at the city center. While our original timelines have certainly been delayed a bit due to the global supply chain outages affecting a completely import-dependent nation like Cayman Islands for construction material and equipment, we look forward for commissioning the expanded operation in a phased manner, starting with the radiation oncology program within the next 10 to 12 months. Overall, we do remain confident in this regional business emerging as a strong pillar of our future growth. Separately, as part of our continuous evaluation of our portfolio of business units, we have decided to further rationalize the same by discontinuing operations at our ophthalmology-focused lease center at Kolkata, that is the Rotary Narayana Hospital, as well as our fledgling heart center operations at the Imperial Hospital, Chittagong, Bangladesh, to sustain the long-term interest of the business. As regards our continuing focus on various digital initiatives, we have now extended our homegrown Atma HIS and other allied products like Atma application for doctor insight, which is ADI, lab information systems, electronic claim management systems to our overseas unit at Cayman Islands. Also, we have now improved the patient registration experience by integrating the Verified Digital's regulatory compliant Aadhaar-based KYC database. On the ESG front, during the quarter gone by, we achieved a net carbon reduction equivalent of 3,913 tons through various energy optimization activities like using alternate energy, upgrade or replacement of equipment across the network, and also upgraded the critical fire detection systems across our hospitals at Aura. On the clinical front, we continue to deliver advanced super specialty work as reflected in some of the highlights. We have continued to do advanced quaternary work in cardiac sciences, oncology sciences, as well as GI sciences across the entire network. Majumdar Shah Medical Center performed a unique total robotic bariatric surgery, the first ever case in Karnataka. The unit also published the largest series of robotic Whipple's operation, which is done as a total robotic surgery for pancreatic cancers in the entire country. The SRCC Children's Hospital performed a complex case in perinatology to treat twin-to-twin transfusion system through a fetoscopic laser ablations. This is performed very rarely across the country. The unit in Raipur performed a complex oncosurgery for the cancer of the pelvic bone called chondrosarcoma by doing what is called as an internal heavy pelvectomy, where they replace the entire pelvic bone, half of the pelvic bone, as these cancers generally do not respond to chemotherapy and radiation. The Guwahati unit also performed a complex Whipple's operation for pancreatic cancers in a young 10-year-old child. And also the Ahmedabad unit has done a rare case of total elbow joint replacement for refractory inflammatory arthritis, as well as doing very complex angioplasties using intravascular ultrasound guidance for chronic total occlusions. In the backdrop of the third wave of the pandemic prevailing in the country, while our Indian operations has been quite impacted in the month of January, we are hopeful that recovery would be faster this time round and remain well placed to sustain the business momentum, notwithstanding COVID-19 related uncertainties. Looking ahead, with lives and livelihoods of the community at the core, in standing in solidarity, we remain committed to deliver quality, affordable healthcare to all. Thank you.
Thanks, Dr. Rupert. I think we will open the question and answer floor with that. Please use the raise your hand option that's there with Zoom out here, so that we can go one by one to everyone and seek the question from
Recording in progress.
Viren, will you take that?
Okay.
Yeah,
I'll start and then Rupert can take up. Yeah, the work has started. We've started with refurbishing a lot of the OPD and IPD areas. Given that these are all running hospitals, it is taking in a more gradual manner, but it is on track. So, for example, there are a lot of areas where the rooms are being reconfigured to deal with the COVID occupancy and all the ICU work related there. That freed up space that we are then using for more procedure rooms. But this is something, like we said earlier, will take up over the next 5 years.
Have been, as Viren has been mentioning to you, we have been doing that, and we are timing it along with the requirement of beds in the units. So we are trying to balance out the requirements as well as how much beds we can actually take out for the renovations purposes. But it's a fine balance, and we will be able to cater to the timelines which we have in place.
Okay, thank you.
Thanks, Shantanu. I think we can move on to Ahmed. Ahmed, you can go ahead with your question.
Thank you for the opportunity. My question is on the Cayman business. So if we understand the relationship between the revenue, ARPOBs, and the margins of Cayman business, we are maintaining the ARPOBs of about $2 million even in Q3, and the revenue has grown about 25% sequentially. But still the margins have come down about 4%. So what explains that margin blip? Is it the some mix change in the revenue or any specific component of cost structure? Can you please explain?
Sandhya, you want to take this?
Yes. A lot of our margins are dependent on the type of procedures we execute. So sometimes we have more higher end procedures which give us a better revenue realization, but they also come at a higher cost. So some of that mix effect of the procedures is what is flowing into the margins. So that you would have seen across, even in India business, we have that depending on the type of procedures we execute, there is a little bit of a range in which the margins, and because Cayman is standalone, so it stands out in a more prominent manner. But in India, because of the balance between the hospitals, you don't see that as prominently as Cayman. Does that answer your question?
Yes, definitely. I understand that we are not currently operating in a steady state world, but how sustainable, what kind of margin do you see sustainable in the future for the Cayman business?
So we would, so as we see today, we would be, you're aware that we are coming up with an on-co facility. So there would be some amount of investments we will make in the near term because of the hiring of consultants, infrastructure, etc. So we will see some amount of dilution in the margin in the near term, and then we will pick back up. So if you ask me for an outlook over the next few quarters, I think the current numbers are numbers post that, until our full facility comes up, full hospital comes up and starts operating at full volumes. So that's the kind of estimation, but I don't want to give a forward-looking number at this time because A, there are many variables, and B, also it depends on the scale up. Does that answer your question,
Yes,
Amit?
very much. Just one question on the, just a word on the tax rates. So, is it fair to assume that a Cayman business tax rate is obviously zero, and the India business tax rate will be steady state 25%?
So we haven't hit the, we have certain brought forward losses which we have to set off, and therefore we haven't opted for the 25% tax rate yet. So when we cross that period, then we will opt to the 25% tax rate.
That answered my question. And just one question on the India business. So this quarter we have about 5.7% from the international patients in the India business, and say it moves back to 8-10% kind of a number in upcoming quarters. So does that leave some room for the upside in margins and ARPOBs of matured hospitals in the upcoming quarters from the current base?
I'll answer this one. We had taken a call in the middle of the pandemic to not create any pricing differential between domestic patients and international. This was a practice that was normally done because of a huge amount of referral payout involved in international patients, which we don't want to do. And so fall in the same category as our private rooms. I would say that it would have an impact, definitely. It would lead to higher yielding patients, but not enough to materially change the numbers in a very short period of time.
Thanks. Thank you so much.
We can move on to Ranveer Singh for the next set of questions. Ranveer, if you can unmute yourself and go ahead with your question.
Yeah, thank you. Thank you for taking my question. Just on EBITDA front, what has been the EBITDA in HCC during this quarter?
Yes, I think that was covered when Dr. Rupert gave his initial introduction. We have delivered an EBITDA of 10.2 million in Cayman in this quarter 3 of FY22.
Just I wanted to reconcile the numbers. So consolidated is 181 crore, a standalone is 89 crore, and 10.2 million is some 75 crore is from Cayman. So what are other subsidiaries which has contributed to?
So there are other Indian legal entities, like our Meridian business is in a separate legal entity. And there is also the specialities, SHPL, which anchors our Dharamshila and Mysore unit. So they are also in separate legal entities. That is the reason you are seeing the difference between standalone and Concall not being equal to Cayman number.
Okay, fine. And I see despite in-patient and outpatient number has significantly improved, yet I see on EBITDA front, on most of cluster, we see the Q&Q decline. So any particular reason?
Actually, like Dr. Rupert had explained, there was a one-timer in the Q2 EBITDA, which we have now, which is not repeating. And despite that, we have delivered the increase in terms of the EBITDA at a group level. Now, obviously, some clusters, this is, as you are aware, is a seasonal quarter. So some clusters have seen the impact of the seasonality, some clusters have not. So where we've seen the impact of the seasonality, you are seeing that little bit of difference in terms of the run rate. Does that answer your question, Ranveer?
Yes, yes. So just getting more detail on it. So like in Delhi cluster, so last year we had some 0.9% of EBITDA margin. This time it says 0. So was it related to COVID last year, or why this is a 0 in this quarter?
I think there is an impact of seasonality in the Delhi cluster. Slide. That is what is causing that. Having said that, I think
Recording in progress.
The revenue will obviously be in addition to the organic growth we have been delivering in HCCI. The revenue increase will be also dependent on the commissioning of a new facility, and in line with that, relevant occupancy. So there will be an investment in EBITDA for a while, and then we will pick back up.
If I can just add to that, the construction period will be split into two phases. One is the oncology block, which has started right now. This is for radiation oncology. That should take very optimistically, maybe 9 to 10 months. But if you want to be realistic, we would say closer to a year, given the challenges of importing material in and out of the island. And 1 year after that will be the surgery room, the cath lab, the ER and trauma center. And so the ramp up, what would happen in the manpower and so on would follow more or less once the building construction is ready. And that would lead to, I would say, a temporary margin percentage dilution while the unit picks up, but eventually it should return back to sustainable numbers.
But top line would be increased after installation of this.
Yeah, the top line would increase because we're adding more specialties, more clinical departments. Parallelly, also, we're looking at adding more clinics. We've set up a clinic in this shopping area in the middle of Cayman called Caymana Bay and started chemotherapy there also. It being a clinic, its contribution is smaller, but that will keep growing. That will keep happening constantly.
What kind of investment we have made for this expansion?
These are small clinics that are in rented premises. So those anywhere from $500,000 to $900,000 clinics will be setting up in different parts of the island.
Okay, okay. And just a last one on international patient has increased significantly in this quarter, but still you mentioned that you have not increased the prices. So going forward, can we expect these prices going?
Sorry, the last part of what you said?
So in next few quarters, can we expect the pricing for international patient would be higher than the domestic one?
No, see, so on average, the average international patient ends up paying more than the average Indian patient because the average international patient is more likely to opt for a semi-private or private room. But on a like-to-like basis, we've not created any differential in pricing for international or domestic. Same amount. And so from that perspective, we want to create a parity between people coming from all over the world to our facilities and create a more value experience for them. But definitely, the more international picks up, it will increase the overall average ARPOB, but not to a very drastic extent.
Okay, fine. Thanks a lot. Thanks a lot.
Thank you.
This is all from my side.
Deepa, you can go ahead with your question now.
Hi, this is Deepa's colleague Amit. Just a couple of questions. So one is on the pricing change. I think in the last quarter you talked about affecting a price increase probably in January. Has that been done? And could you give some could you share some numbers around average increase in prices that you have affected?
Sure. So we have taken prices very, very moderately, only to cover for some of the increasing costs that we have. And that is, we have not instituted any org level price change. Therefore, this is very much at a unit level. And each unit have taken a call depending on their respective cost profiles and their respective operational profiles. So I am not sharing any specific number because it's very different for every unit. But you can just assume that it's a very small increase that we have effected in the pricing.
Understood. And second question would be around, could you throw some light on your long-term growth strategy? Where is the long-term growth, if I look at it from a 3 to 5 year perspective, coming from? Is it going to be in, outside of India? Are you adding more beds in existing facilities in India, or will you be also looking at inorganic growth opportunities? Because I don't see any new greenfield coming up, and if I compare you to some of your peers who are aggressively adding hospitals in India. So are you less bullish on the outlook here in India, or and if you're going to be adding, where are you going to be adding in terms of geography?
I'll answer this one. We're not less bullish on the outlook in India. It is no doubt a very challenging jurisdiction, and healthcare is one of the most regulated sectors, and it's very difficult to meet all the stakeholder requirements. But the long-term outlook is always one that trends towards more healthcare required for the country. So from that perspective, I would say that our stance has always been not to overspend, not to overbuild, not to overpay for any assets. And that's why we've been a little more cautious compared to the rest. Now, if you ask, where is the next set of growth going to come from? And you mentioned a couple of things. And the answer is a little bit of all of them. There is expansion in Cayman, which we are doing right now. There will be opportunities we'll be exploring in the surrounding countries also. Those will be slower and more measured. In India, it will be a combination of greenfield, brownfield, and inorganic acquisition, but all of them, as long as they adhere to certain core tenets. The most important being, one is it's synergistic with the existing operations. So the most obvious thing is a brownfield, because if a hospital is full, it makes more sense to add capacity, and I can augment an existing infrastructure at a relatively little cost. The thing that will come after that is greenfield, but then the way we would look at that is greenfield in the same city. If, for example, opportunity comes for us in places we are best known, let's say Bangalore and Calcutta, it will make more sense for us to go into that. But even in that, it would have to be very synergistic with our existing infrastructure. So something that is available close by, something that is available in a very complementary fashion, or a part of the town where we believe the market is growing. Those are things we will take up. But again, that is always second fiddle to the brownfield expansion, which the opportunities are there, and we will be adding capacity to our existing units as and when they start to fill up. The last part is on inorganic. Those come few and far between, and there are many kinds of inorganics. There are the ones which are privately held, trust-run, non-profit, where we sign O&M agreements. There are some that are completely just management contract-based, and there are some, of course, that you have to pay decent money to acquire. The first three, the ones that are available to us at relatively low cost, we keep pursuing, and here and there we sign up, and they take their own time to do it. It's very hard to plan in advance that I'm exactly going to add 500 beds in Delhi over the next 3 years. That's completely inorganic. That's hard to do. The opportunities no doubt exist, but you'll have to overpay for those beds if they have to meet your profitability criteria. So instead, we will take it up in a more opportunistic fashion. But for the last part, in the inorganic acquisitions, they have to be close by. They have to add something very important to our units. And that's how we look at it. But yes, there is definitely over the next 3 to 5 years, a combination of consolidation where in our existing network, we will be trimming some low yielding departments and low yielding beds and adding more high yielding beds, improving the infrastructure, as well as for few, not all, but for few of the cities we operate, for adding more capacity to take care of our patients.
Sure, Viren, that's extremely helpful. Just a follow up to that, are you looking at any other opportunities like outside of India beyond Cayman?
Yes, in the Caribbean region, there are opportunities we are pursuing. For example, we currently have a contract in St. Lucia for running the government hospital. We are talking with them to see if they'd be interested in having us run, the hospital for a longer period of time. There are other Caribbean islands we're looking at, but these things, it just takes a lot of time for us to do. And the North American region is something that's more of a long-term interest for us, which we will evaluate as and when these opportunities start to come about for us. We had this opportunity in Bangladesh for running the cardiac center, but there were a lot of challenges in running that. And so if you weigh the time and profitability and the amount of management attention it would take against other opportunities that present themselves, it wasn't really working out for us. And that's why we decided not to renew our contract there.
Got it. Thank you and all the best.
Thank you.
We can move to Jalak. Jalak, if you can ask your question.
Thank you for the opportunity, sir. So firstly, congrats on the good set of numbers. But my first question would be, what is your occupancy rate on the quarterly basis, like the Q3 December 21?
Devanshu?
Yeah, it would be around 53% at a consolidated basis, at an India level, that is. And separately, Cayman was around 52 or 55 odd percentage for the Cayman facility.
Okay, so this is basically on your operational beds, correct? The 6,000.
Yes. No, this is on my census beds. All occupancies reported by the industry is on census beds.
So I'll take it on the capacity is basically 6,800, out of which your census bed is?
No, so census beds typically are the revenue generating beds as understood by the industry. In our parlance, we dub those as the beds excluding beds like emergency, daycare, post-op recovery, and so on and so forth. So it's a subset of the operational beds. As a thumb rule basis, while the different hospitals, they basis how proficient and how important a daycare program they are running would have different numbers of census bed as a percentage of the operational beds. But at a very general thumb rule basis, if I were to give you an indication, it would be like around 85% of your total operational beds is roughly your census beds.
Okay, so your 85% is census, and your next the 5% is the next 15% is your non-census bed, correct?
Yes, roughly. That is the split of the total operational beds.
Okay, and this occupancy is on my census bed. That is
Yes.
Okay, so I'll take 6,100 into 85% and into 52%, which you gave me, the India basis. Correct?
At a very indicative level.
Yeah, sure.
Yeah,
and sir, my next question was current on quarterly basis, if you see a specialty profile, the cardiac science have increased to 35%, which was 22% in Q1, correct?
Yes, Jalak, go on.
Yeah, so sir, as per my just a question on this, is the margins high in your cardiac science as compared to other specialty profile?
Typically, yes. I mean, depends on what that cardiac specialty is replacing it with. But on a very aggregate basis, if you see my other specialties, if it comes down, when I say others, other than the top 6, you basis cardiology procedures, typically we would see higher profitability in this particular modality.
Yeah, so sir, if my cardiac science, the profile mix has increased along with an increase with my international patients. So, but sir, if you see your average revenue per patient, which was 1,25,000 in quarter 1, has reduced to 1,09,000 in quarter 3. Sir, any specific reason to this?
That would be the COVID impact, right, Himanshu?
Yeah.
Quarter 3?
No, Q1, we had a lot of COVID admissions. So these people come in and they have a huge amount of medical expenses.
Sorry to interrupt, but your COVID during your quarter 1, your the mix would be in others, right? Your mix is in cardiac science, the 35%, which has in 22 to 35%, that has increased in cardiac science. So your as you said, your profitability and your number would also be high in cardiac science, correct? The chargeability to the patients.
I'm a little lost. Devanshu, are you able to?
No, sorry, I didn't get the question. What is the question? Jalak, if you could repeat.
Sir, I'll repeat. My question is, your in your specialty profile, which was in which cardiac science is there. The cardiac science was 22% in quarter 1, which has increased to 35% in quarter 3.
Yes.
Correct?
Yes.
And as mentioned by you, this it has a higher profitability margin. So and another thing, your international patients have also increased from quarter 1 to quarter 3. But if I see my average revenue per patient of the inpatient, that has come down to 1,09,000, which was 1,26,000 in quarter 1. So any specific reason of my ARBP coming down?
So first of all, I mean, this has got to do with the denominator part. So increasingly, we have done a lot of other procedures in medical procedures and other procedures, which probably would, other than the revenue part, it would have a dilutive impact on the ARPP workings. That is what, yes. So if you look, the discharges have gone up significantly for the period that you are comparing against.
Okay. So this was the number of increase in my IP, the denominator, that is the only reason, correct?
True.
Okay. And so last question, the Cayman OP has decreased from quarter 1 to quarter 3. So it was
OP would have ARPP would have gone up.
Yeah, ARPP would go up because my OP has reduced. My denominator is reduced and hence my ARPP is going up, correct?
Okay, you are referring to footfalls, OP footfalls when you say it has reduced.
Yeah. So any specific reason to that?
That's the seasonality. This is Q3 is end of year. There includes Christmas time, where most people are on vacation, including our doctors and the patients as well. So most people generally try not to schedule doctor's appointments around that time. That and the impact of COVID on the islands. Early on, the island was in full lockdown, and over the past couple of months, they've been opening up slowly. And so it's because this is a population not been exposed to COVID at all, so it spread very quickly over there. And so people were more completely locked into their houses and not moving around a lot. So that led to reduced footfalls.
Yeah, and so one more question. Sir, as you mentioned, your occupancy percentage is roughly around 52% right now. So what is like any target or any peak occupancy that you can guide? And in the time, like in like 1 year, or how much time would it take to reach the peak occupancy?
See, one of the things we've been trying very hard for the past 3 years is to move our industry away from occupancy, because hospital occupancy is not like hotel occupancy, where you come in, you stay in the bed, and then you leave the thing. For us, our constraints are the ICU, the OT, the doctor availability, all of those. So those are constraining factors. So even though we may show, for example, in our flagship centers, 65% occupancy, overall, that will be the availability of general ward and the large number of beds there. But in the OT capacity on the ICU, that will be completely full. And so what we would have to do is addressing the occupancy number more by reconfiguring the beds to put it more in line with the patient flow and the length of stay and so on. So that's why we're trying to move towards ARPP and those sorts of metrics that give a better indication of forward momentum for our business rather than just blindly filling up beds.
Yeah. In increase with the IP and OP, along with the increase in an IP and OP, correct?
Yeah.
Okay. Thank you.
Thanks.
We can proceed to Harit. Harit, if you can ask your question now.
Hi, thanks for the opportunity. So my first question is on new hospitals. Can you comment a bit about what is happening at these 3 new hospitals, especially the Delhi NCR cluster? We've seen a lower EBITDA compared to the second quarter. And if you could also comment about the competitive intensity in this region. Quite a few of your competitors have announced bed addition plans here. So how do we see the improvement from here in the 2 hospitals in Delhi NCR?
I'll take the question on the EBITDA and then I'll hand over to Viren on the competitive intensity. So as far as there are 2 hospitals, Dharamshila and Gurugram. I think in Dharamshila we have started generating positive EBITDA. We have seen a slight decline in Gurugram, but that's the effect of the Q2 to Q3 seasonality. We're confident that Gurugram is starting to turn around. The negative EBITDA that we are having is a small number and we can cross that. So I think in a matter of 6 to 9 months time, I think we should be able to turn around Gurugram also into a positive EBITDA number, and from there we can build on. I'll hand over to Viren on the competitive intensity bit.
Yeah, it is a competitive market, and I would say Gurugram being some of the most contested real estate for healthcare in the country, we may not be able to match the quantum of investment that are made by some of the hospitals that have announced, massive investments in Gurugram. But we can do the best we can with what we have while keeping a lot of the fundamentals in place. So in Gurugram, for example, our hospital has scaled up well, and we expect sometime next year for it to reach a full proper break even. It did break even for a few months during COVID, and as the thing normalized, went back, but it's nearly there. The kind of investment we would look at for Delhi, given that for us at least, it's still relatively new. For us, anything less than 10 years is closer to being new. For them, the kind of investments we make would be on bed addition to the existing infrastructure, something close by, or reconfiguring the setup. Only when it is completely full, like in Calcutta or Raipur, for example, would we then look at proper bed addition.
Okay. That's helpful. Just a clarification on the Cayman hospital related question that was asked previously. The ALOS increase that we're seeing on a quarter-on-quarter basis is on account of higher volumes from COVID. Is that understanding correct?
Devanshu?
Not necessarily, Harit. There has been generally an increase in long stay patient in Cayman. It has got to do with our observation, particularly in couple of cases like general medicine and neurology department in particular, as well as few LVIT cases in particular that we did a couple of them in the last quarter, which generally resulted in a higher length of stay across these select procedures, which ultimately, given the comparatively lower base of total discharges that we do, resulted in the higher ALOS for this quarter over previous ones.
Thanks, Devanshu. Thanks for taking my question.
We can go to Samir. Samir Baisiwala, you can just go ahead with your question.
Yeah, hi, good afternoon. Thank you very much. Can you talk about the sort of a brownfield expansion that you are planning over the next 1 to 2 years for India?
We'll be setting up oncology centers radiation oncology centers in Ahmedabad and Jaipur. Those we had announced. We will be adding some bed capacity in our Howrah hospital in Ahmedabad. We have bought up some nearby buildings for our Arctics unit in Calcutta, and there's a small piece of land very close to the hospital we're looking at buying, which will be used for setting up radiation oncology. there is an opportunity for us to get a landlord to build an OPD plaza next door to our main health city in Bangalore. That will be on a rental basis. So investment there will be less, and we'll be using that to move a lot of the non-clinical admin and certain amount of registration OPD put there. Other than that, Dharamshila, we're in discussions with the partner for adding a few beds in bone marrow and ICU. Gurugram, if we get permission from the development authority, the Haryana Development Authority, we can add 2 more floors there. That will come up. Mysore, we will be adding 30 beds on private and semi-private rooms. Shimoga will be adding radiation oncology. So yeah, I mean, basically what you're looking at is nearly every hospital we have, with the exception of Guwahati and Jamshedpur, we'll be doing some combination of capacity addition and oncology.
So that's quite a handful, Viren. So you think all of this will get done in next, say, 2 years, and the sort of beds that get added is what, 300, 400 bed capacity?
No, not even close. These are all, most of these are 20, 30 bed additions, and they're just reconfiguring, and radiation oncology doesn't add any bed. The 300, 400 one that, we're working on, and we'll present something more comprehensive in the next quarter.
Okay, we look forward to that. The second question is a quick clarification. The one-off EBITDA contribution that you talked about, Sandhya, was last in 2Q not being here. Was it St. Lucia?
So there were 2 aspects. One was St. Lucia, which we spoke about in our previous earnings call. We also had a unit in Whitefield which got closed down, and we were working on getting a refund of our deposit. So that came through as well. So that was another about 6 crores. So that was the other one-off in the last quarter results.
Okay, and St. Lucia, if I remember correctly, was 21.5 crores or so. So what was its contribution in 3Q?
So St. Lucia, we have many moving parts in terms of the work that is happening there. So in Q3, we've not taken any revenue from St. Lucia. We take it as and when we have a greater certainty of how the revenue is getting accrued to us.
Okay, got it. The other question is for RPOB here in the India business. I think if I see all the clusters, by and large, they've seen a sequential as 2Q to 3Q, a decline anywhere from 6 to 10%. So what's really driving this?
Debangsu, you want to answer that?
Yeah, this is Samir, in line with this general seasonality impact that we have talked about right from our opening remarks. So as we see across the board, there has been a general dip in revenues, and a lot of the high-end procedures are typically deferred within, and people do not feel comfortable planning those in this elective season, the festival season. That's the reason you would see Q3 over Q2 every year, a revenue dip accompanied by an RPOB dip, accompanied by a margin and the profitability dip. That's true of almost all our units this time round, but for Health City, which actually picked up the momentum given the relatively underperformance in the previous quarter, unlike all our other hospitals. So that's the reason it has the other hospitals Q3 over Q2 sequentially is in line with what you would expect of any Q3 over Q2 across the board that you would see even previously with our hospitals.
Okay, no, that's very clear. And
Samit, sorry to clarify, just one point on your previous thing itself. On an overall basis, if you are looking at a sequential comparison, and I thought I'll just clarify that. So the net movement in St. Lucia has been a 21.5 crore positive gain recognized in last quarter, with additional 2 crore of loss that, for the expense, and since Sandhya mentioned, we have not decided to accrue any revenue this quarter. So the net impact was 23.5 odd crores. And additional impact of, as Sandhya mentioned, around 6 crores for the Whitefield write back of provision, and there is an incremental 2.5 crores towards the vaccine contribution that was there in the previous quarter, which relative to this quarter is not there. So on a net basis, if you see at an aggregate basis, while I have reported almost similar kind of an EBITDA at an aggregate number of around 181 crores. But actually net of this, there has been a 30.5 odd crores of increase across my Indian and Cayman operations, sequentially speaking, which is almost equally split between India and the Cayman part.
Yeah, that's thanks, Devanshu. Very helpful and shows a very solid performance. So good work done there. Just wherein, in line with the Jalak's earlier line of questioning on the occupancy, etc. So I guess the question that's there in our mind is, how much, volume growth can the current network of operating beds support, going forward? I just want some qualitative color. Is it good enough to take you next 2-3 years, longer, shorter, before you really are, tight with capacity?
If I do nothing without investing in the infrastructure,
Yeah.
I would say still about 2-3 years we can manage. Just through a little bit of efficiency optimization by scheduling surgeries more intelligently, by getting more people in the ICU and converting few beds with the. So doing nothing, I think we have still 2-3 years we can sustain, but that's a little bit unsustainable, because then the infrastructure really starts to degrade and doctors get a little demoralized when they're not seeing enough beds being added to take care of the demand, or not enough refurbishment being put into the private patients who they want to convert. So the ones, and there's three kinds. One is this sort of bare minimum thing, what we have been doing during this pandemic, where we really haven't spent much and just reconfiguring a few places. The next part is this brownfield thing, what I said, 20-30 beds per hospital, adding certain clinical departments. And the last part is adding properly, like an additional wing, adding 100 beds at a go, adding a new annex or a building block, or so on. So those are the things we'd have to do in a staggered manner to keep driving for optimum utilization of our facilities and increasing both the yield, the ARPOB, and EBITDA, obviously.
Okay, now this is very helpful. One final question, if I may. I see you have detailed pretty high-end surgeries in sort of a tier 2 markets like Raipur, Guwahati, and Ahmedabad. Is there anything to read into this, or do you think it's business as usual? Read into it as in, much high-end stuff is moving, from metros to even smaller cities and towns, and what it means for your business.
I'll ask Dr. Rupert to address this one.
Yeah, so we have been putting together a clinical team which has the capability for doing this, along with the support structures in both clinical and infrastructure. And we have seen with the pandemic, people tend to wanting to get everything done in the same places. They don't generally go unless it is a very quaternary kind of a work. So a lot of tertiary work is becoming routine even in these kinds of cities. So we have been constantly working on that, and going forward also we will be seeing a lot of these procedures happening in these places.
Okay, that's great. And is it the doctors traveling from metros to these, or are these the doctor talent which is already there in these smaller cities?
So we have in certain places where we've seen that we need to augment the talent, we have augmented them, and where we need to have doctors, upgrading their skills, we have done that over the period of last 2-3 years. And we also have this hub and spoke model. So for very high-end work, we do have people from the spokes, from the hubs, willing to support them and go there and work with them. So it is a combination of multiple things which will constantly see the spectrum of clinical work increasing in all our sectors.
Okay, great. Thank you. That's it from my side. Thank you very much.
Thanks, Samir. I do see a raised hand from Ranveer as well. I'm not sure, Ranveer, you want to ask another question?
Anyone else?
Ranveer, do you want to ask Jalak? Anyone else? I'm not sure. Jalak, do you have any follow-up question?
Yes, sir. Yes, sir. So thank you
please
for
go
the follow-up question. Sir, I just want one clarity or just understanding. As you said that your OT is occupied at full capacity, correct? So, sir, I just wanted to know that currently, since it is occupied at full capacity, so how can we debottleneck in the current hospitals that you have? Because if your capacity is fully occupied, then how can we increase the surgeries in the year or in the quarter? Hello?
Yeah, no, so I'll try and answer this, and Dr. Rupert can pitch in.
Yeah.
This is, see, an OT operates generally 8-10 hours a day, but you can operate for longer, and in some places they do. But then the constraint for the OT is the ICU. The ICU, and again, depending on the time of year, depending on, especially during COVID, where people staying much longer, that tends to be a constraint, as well as there's a reverse feedback also in that, which is when the ICU is full, the OTs will actually start to reduce their throughput, because the doctors feel that, oh, if I operate, then there may not be a bed for the patient to be managed. So a lot of the work that we're doing in increasing the capacity utilization is reducing the number of very large format general ward beds, reconfiguring them as semi-private rooms, thus freeing up certain other areas that can be converted into ICU areas. And so that will, not by a lot, or in few places shrink the number of beds, but it will increase the throughput, because then people are able to get processed in and out much faster, because length of stay comes down in that instance.
Correct.
Anything?
Yeah, sir.
That is one more thing which we've been talking to you about, the technology part of the apps called the Adi, the Atma Insights, Doctor Insights. So these are all tools which the doctors will be able to use to constantly keep a watch on patients wherever they are, irrespective of whether they're in the ICUs or a step-down ICU or in the wards. So these are some of the things which we, in addition to all the things which Viren has explained, these are some of the tools which we use to increase the throughput in various areas and move patients from one area to another, and thereby enabling us to do more procedures wherever we have the infrastructure. Wherever we are not able to increase the efficiencies and move things further, that is when we keep adding more infrastructure. And we've added a couple of OTs in our flagship in Tagore and things like that. But then, wherever we have a shell, like in the Health City, we are equipping them and increasing the capacity for us to do more.
Okay, understood. And so just last thing, as mentioned by you that you're adding 500 bed in the next 3 years. So this will be in your current hospitals or new areas. And second thing, these would be more towards your ICU or your general?
So we're still working on a plan that will allow us to get to capacity addition, and this will be over the next 5 years. And it'll be a combination of all of the above. So that's why I said, once we get a lot more clarity from internally, once we discuss with our board and get the approvals and phase it all out, then we'll be able to more accurately explain what is going where.
Okay. Thank you, sir.
I see a question from Prashant. Prashant, you can go ahead.
Yeah, thanks, Devanshu. So just a couple of questions. I missed the early part of the call, so just apologies in case this has been addressed already. So at your Bengaluru facility, where you've seen significant QOQ growth, how far would you say you are from normalization? Are you already now at normal levels, or do you think there is some more room here to get to where you were, say, pre-pandemic? And both in terms of revenue margins, but also in terms of patient profile. So say the out of city patients, international patients, etc.
Rupert?
Yeah, we've been constantly working on the patients coming into our flagship hospital in Health City, Bangalore, by trying and trying and getting patients within a 35 kilometer radius. So we've seen a lot of traction in certain specialties. But then in the cardiac hospital, it's always had a pan-India kind of network of people coming from all across the country for very high-end work. And with the COVID easing out in Q3, we've seen a lot of this movement of patients coming from various regions of the country. That has got impacted in January, but as and when, so this all depends. It's directly proportional to the COVID in various other regions, in addition to the COVID effect in Bangalore. So when we see that, when we have a little bit of an ease on that, we will see all the patients coming back, because there's a lot of pent-up demand of people for very high-end tertiary and quaternary work, which they've been postponing, and they'll keep coming back to us for all this kind of work. And also in other specialties also, we've seen a lot of movement in the vicinity of 35 kilometers. We've seen a lot of patients moving into the hospital for various procedures, in addition to the people coming in from other regions.
Right. And just one more question. Just wanted your thoughts on your, so how should we think about your effective tax rate for this year and say the next few years?
So for India, it will be 35%, because we have still not moved to 25% tax regime. And Cayman, as you know, we do not pay tax. So that will be depending on the mix, how we finish, that will be our tax rate for the current year. We still have some carry forward losses, as I explained earlier. So therefore, until we are able to complete that cycle, we will not be able to move to the 25% tax regime. So I think this is what will be the outlook for now. As we go forward and we are able to move on this, we can share more information.
Yeah,
just to clarify on that, Prashant, I mean, effective tax rate will be lower than this, because we do have the benefit of the carry forward loss that Sandhya just mentioned, and good portion of our consolidated PBT now is tax free coming from Cayman. So effective tax rate will broadly be in line with what you are saying. But yeah, as India business picks up further, so the taxability possibly as a percentage of the book PBT over book PAT will also increase slightly.
Right. Thanks a lot. That's it for me.
Ranveer, do you have any follow-up question? I see a raised hand from your side.
Yes. I think partially my query has been answered. Just again, the question was related to sustainability of the growth we have seen in this quarter. So basically in Bangalore cluster, pre-COVID level, we used to see some 40% contribution from this center. We have 35%. So with that 35%, can we expect going to again 40% in next few quarters?
I would say that there's been an impact because of this January Omicron wave. So Q4, the last quarter, which generally is the strongest quarter, unfortunately got impacted because a lot of our doctors, a lot of our nurses had got infected, despite being vaccinated, and some of them had boosters also. So it led to a lot of cancellations, as well as because of the Omicron, a lot of patients also voluntarily postponed their elective procedures. We are hoping that a lot of that will recover soon, and we're seeing very strong recovery in February. Hopefully that momentum is able to sustain in February and March as well, in which case we should be getting back. But this is one quarter, unfortunately, that will be looking a little moderated with the rest. And let's hope that the COVID is past us, or even if there are further waves, that it won't be as deadly as what it was in the Delta wave. In which case, then I think we have a lot of the fundamentals to keep growing, and a lot of the things that we have done in terms of our bed mix, in terms of putting in the technology, and in terms of our surgery and ICU work, we should be able to keep delivering decent amount of growth, combined with a lot of the capacity addition and the oncology practice we'll be doing.
Yeah, so the context was that in this quarter, initial part of the quarter, there might have some pent up demand also in elective surgery, basically into the quarter Omicron might have affected. So net to net, I wanted to understand that this is sustainable base currently in most of segment, or we can see either a specialty mix changing going forward significantly, or footfall in any of these clusters are going to increase or decrease. That's what I wanted to understand.
Yeah, the only big swing you'll notice will be because of the January effect, because of Omicron. But I'm assuming that this is the last major wave, in which case it should reach to historical numbers in terms of the case mix percentages and the ALOS. The RPOB would, because of a lot of the work we've done, has increased from the historic norms, and we believe it should sustain at that level.
Okay, that clarified. Thank you.
I think we can take one last question from Nitin Agarwal. Nitin, you can go ahead.
Thanks, Himanshu. I think we alluded to that a little earlier. So what should we assume would be roughly be our ICU occupancy right now in the system? And with the measure that you're taking to increase ICU capacity across various hospitals, roughly by what percentage do we think our ICU capacity will increase over the next 2-3 years with as a consequence of a brownfield expansion that we are undertaking?
Rupert, you want to take this? The percentage occupancy and
yeah, percentage. See, the ICUs is just clubbed together as a broad category called ICU, but they're actually split across things like surgical ICUs and neurosurgical ICUs and cardiac ICUs and the pediatric ICUs and the medical ICUs. So if you really look at it, the procedure-related ICUs is directly proportional to the procedures that we do. The occupancy will be directly proportional to that. The more the procedures you do, the more the occupancies that will happen in those things. And we work on significantly in the efficiency so that it doesn't become a bottleneck in the number of procedures that we do. While the medical ICUs are all generally a little longer stay patients, because these are all very chronically ill and very elderly people. And these stay for a longer time. And this is also, this is more or less a steady state throughout the year, irrespective of what happens. That kind of an ICU will always remain and have an occupancy which is high. So depending upon the hospital to hospital and the kind of community that we serve, generally these ICUs have occupancies in excess of 80-85% occupancies, while the procedural ICUs have very high occupancies in different days of the week, depending upon the kind of procedures that we do.
And so, Dr. Rupert, are there any particular hospitals in the network where this is the procedural ICU availability has been a constraint for you to grow or to perform those procedures?
No, that is something which the leadership and the clinical leadership constantly monitor on a day-to-day basis, and that is when we plan much ahead of time and see the requirement and keep moving it ahead of time and do that. And for things like 100% of our beds have oxygen beds, and so technically we can convert any area into an ICU if the need be. So in the peak of the COVID and during Delta, we were just able to convert many of our beds so that we can cater to the critically ill. So it's just a matter of a conversion of that. But procedural ICUs, you can't just put a patient after procedure in any area because you can't subject them to the risk of infections and things like that. So that is something which we scale up in a very carefully manner. And we keep monitoring the kind of procedures that's being done and the scale of that, and we keep opening up new areas as in wherever it is possible. So that is where we do that. And we increase the efficiency in run so that we are able to move patients from one area to another in a very timely manner.
Okay. And Himanshu, from the CAPEX perspective, I think you put out a pretty large number at the start of the year. For the next couple of years. How are we progressing on that, and any rethink on the CAPEX number for the domestic business?
Sandhya, you want to address?
So I think we put out about 250 crores at the beginning of the year. Maybe we lend slightly over 200 for the current year. As far as the next couple of years is concerned, like Viren explained, a lot of brownfield opportunities, and the way these opportunities get timed, so that will consume a significant chunk of the capex. The second is the some of the work that we had started in terms of redesigning, remodeling, that's underway, and those are approved capexes. The spends are in progress, so those will continue. So some of the flow over that has not got consumed in the current year will get consumed. And thirdly, because we are opportunistically looking at greenfield opportunities, and if some good greenfield opportunity comes up, then that will be a big capex number. So that's why I'm not putting out like a number out there saying this 100 crores we will do, because that depends on some of it is opportunistic in nature. But we will continue to look for expansion on the brownfield spaces as we can time them, and we will continue on our existing capex path and complete the projects that we are currently have undertaken.
If I can just give one last one, Viren, you talked about other opportunities in the Caymans. In your assessment, in the whole region for us, barring what we've got going in the Cayman Islands, at what point in time do we would be able to create another strong sort of business geography in that region?
Yeah, there are unfortunately, the Caribbean area is pretty large, but there are very few places that have the same characteristics as the Cayman Islands, which is the combination of a very high income population, very business friendly enabling environment, and there not being many providers of healthcare available, as well as their openness to allowing us to come in with our doctors. So we are in touch with a lot of the major countries over there, and there are different opportunities at different places. So for some, we are running information centers. In other places, we're running an outreach center where our doctors come see patients and go back. For others, we have partnerships with other hospitals where our doctors will go do surgeries and come back. But all with the idea that eventually we want to create a presence in that space. But it won't be the same. It won't be as relatively straightforward as what we did in Cayman. And that's why we are trying to do it in a more measured way, smaller investment, seeing how it goes, and then taking a much larger plunge later. So St. Lucia, for example, could have either been an opportunity for us to do what we're doing now, which is a consultancy contract, or one in which you take the plunge and invest $100 million in an investment, and maybe it works out, maybe it doesn't. We're trying to be a little more careful with all these things, and so that's why we opted for the more conservative one. Once we're confident, then we may look at investing some more money there. But for right now, this is how we're looking at it.
Thank you.
Thanks, Nitin. I guess with that, we will end up or wrap up today's session. Thanks again, everyone, for your active participation in today's session. Look forward to such interactions in the future as well. Thank you.
Thank you.